Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be answering a new viewer subscriber question here on the channel. This is one that I was just emailed today. I believe this one would really benefit the total viewership here of the channel. So we're going to be reading it and reviewing it and kind of going over this specific question and the answer that I would give in my personal opinion. So if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I do make videos covering the stock market, dividends, entrepreneurship, real estate. If you're interested in any of those topics, hit that subscribe button. If you do enjoy this video, find it helpful, hit that thumbs up. And if you have any comments yourself, would like to assist with answering this question, providing additional information, drop it in the comment section below. I always appreciate all your guys' feedback. And let's go ahead and get into the question. So I'm going to go ahead and flip my screen around here. And the question here, I'm going to go ahead and zoom right there. So, hi, I have a quick general question about the Roth IRA within the M1 Finance account or just any broker out there. So this is only pertaining to the Roth IRA account. Let's say I contributed $6,000 to the M1 Finance Roth IRA for 2019. Do I have to pay taxes on that $6,000? Well, before I go ahead and provide my my opinion there, quick disclaimer, I am not a financial advisor, attorney, CPA, and no financial, legal, or tax advice is being provided. State laws and individual circumstances may vary. Consult your own financial advisor, attorney, or CPA before you make any decisions that could affect you or your business. So with that said, let's go ahead and we'll flip this back. And the quick question here is that they're opening up a Roth IRA. They've contributed $6,000. Do they have to pay taxes on that $6,000 that's been invested in the Roth IRA? Now, Roth IRA contributions can be made with after-tax money. So if you have a source of income, say for example, I do work, I'm at a W-2 job, I make $2,000 every year or every month of gross income, and gross income get $2,000. I get state taxes, federal taxes, Social Security. I get a whole bunch of taxes taken out, and after my gross income may have been $2,000, but now my net income is somewhere around $1,500. So I can now take some portion of that $1,500 and make a contribution to the Roth IRA. Now that contribution was already taxed from my W-2 income. I had my gross income, it was taxed, and now I had my net income that I was contributing over to the account. Now I do that through a period in the year and I cap it at $6,000. At the very end of the year, I've already paid taxes on the income source from either a W-2, if you're doing some other sort of job where you're not getting your taxes withheld, you may have to pay some sort of taxes there. But generally, if you do have some sort of W-2 job, they do take those taxes already, and the contributions that you've made to your Roth IRA have already been taxed. Now, at the very end of the year, when you've made those contributions to a Roth IRA, they've already been taxed. You don't have to, account for them anywhere besides saying that you've contributed up to $6,000 and not over, and you don't have to worry about paying any capital gains. You don't have to worry about paying any taxes on dividends, interest, or capital gains. Now, there are some circumstances, such as if you have an MLP within the Roth IRA and you get issued a K1, there are some circumstances where if you're issued a K1 and you've received over $1,000 or somewhere within that range of dividends within the Roth IRA, you still have to claim it, you still have to pay taxes on it if you go over a specific limit. Now, the differences between the Roth IRA and the IRA is, yes, your contributions for the IRA, you're also getting your gross income, it's also getting taxed, you're getting your net income, you're opening up a IRA, you're moving cash into it. Now, at the very end of the year, when you've made $6,000 towards your IRA, you take this to your CPA, or if you're doing it online, you need to specifically mention that you have contributed after-tax dollars into your IRA, and because of that, you're able to adjust your taxable income down by $6,000, not having to pay taxes on that $6,000 for that year. Now, if you do that from the age of 20 until 60, that is 40 years that you have not paid taxes on the IRA contributions. Whereas on the Roth IRA, you've been paying taxes every year. Now at 15 and a half, when you're withdrawing those contributions, those capital gains, the dividends, the interest from the IRA, all of that is completely taxable at your current income bracket. You also have Social Security up there. If you have some sort of pensions, if you have 401k, if you have other specific sources of income, they're all going to start stacking. And it may seem like you're going to be getting a few thousands to stay in a lower tax bracket, but you may not account for so many of the specific, sources of income that you're going to have in retirement, and you may actually push yourself into a higher tax bracket and have those those withdrawals taxed at a higher bracket. Whereas on the Roth IRA, as you were paying taxes on those contributions for the 40 years, at 59 and a half, when you're beginning to withdraw the contributions that you've made in distributions, you can take them all 100% tax-free from the capital gains, the dividends, the interest, and at any time within the Roth IRA, you can always withdraw your initially invested capital. So if you've deposited $6,000 over the course of 40 years, 6,004, that's 24, so that's 240,000, I believe, $240,000 that you've contributed over that 40-year period, you're able to withdraw that invested capital at any time between 20 and 40. Whatever you've contributed into the Roth IRA, you're able to withdraw at any time. Whereas on the IRA, you're not able to withdraw it at any time. You will be hit with a 10% penalty. So those are a couple mentions and information that I wanted to provide there for the IRA and the Roth IRA differences. So they're all both taxed from your gross income. You pay the Fed, you pay the state, you pay all your taxes, but at the very end of the year on your IRA, you're able to adjust it lower by $6,000 and not pay taxes on it. Whereas on the Roth IRA, you've already paid your taxes on it as it was coming out of your paycheck. You don't have to do anything special for those. And at the very end, one is taxable at 60 or 59 and a half, and the other one is not taxable. So that is basically answering that specific question. So again, the quick question there was, if they make $6,000 for the Roth IRA, do they have to pay taxes on it? And yes, you pay taxes on contributions to the IRA and Roth IRA. The only difference is at the very end of the year, the $6,000 that you've invested or contributed towards the IRA, you're able to adjust and not pay taxes on them. And the $6,000 that you've contributed towards the Roth IRA, you've already paid taxes on them, and you don't have to make any sort of changes there. So again, I am not a financial advisor, attorney, CPA, and no financial, legal, or tax advice is being provided. This is just information here that, from my experience, having been invested, having been working with my own CPA, that I haven't had to pay any taxes on my contributions, on my capital gains, my dividends, besides my K1. So that is it for today's video. If you guys did enjoy the video, hit that thumbs up. If you have any questions or would like to provide additional information, drop it in the comment section. I'm going to have a link here in the comment section below to the IRS website, specifically going over to the Roth IRA. So if you guys would like more information, hit that link, head over to the IRS website. And if you guys would like to start your very own Roth IRA or IRA, M1 Finance, I will have a link in the comment section as well as in the description. You guys can start it up with either $500, start your own IRA or Roth IRA, and you'll be able to work for building something for yourself for retirement. So that is it for today's video. If you are brand new, hit that subscribe button, and thank you all for tuning in. I will see you next time. Have a great day. Bye.